Should I itemize or take the standard deduction in retirement? When it comes to planning your taxes in retirement, a big question arises. Should you itemize your deductions or take the standard deduction? This decision can really affect how much you pay in taxes, so let's break it down. First, let's clarify what these deductions mean. The standard deduction is a fixed amount you can subtract from your taxable income. It's straightforward and requires no detailed records. The amount you can claim depends on your filing status. For the tax year 2023, the standard deduction is $27,700 for married couples filing jointly and $13,900 for single filers. On the other hand, itemized deductions allow you to deduct specific expenses. This means you need to keep track of your receipts and statements. Common itemized deductions include medical expenses, mortgage interest, state and local taxes, and charitable contributions. Now, in retirement, your financial situation might change. You may have fewer income sources and different expenses. One key factor to consider is medical expenses. If you have high medical bills, itemizing could be beneficial. You can deduct medical expenses that exceed 7.5% of your adjusted gross income. Another consideration is mortgage interest. If you still have a mortgage, the interest you pay can be a significant deduction. However, if you have paid off your mortgage, this option won't apply to you. State and local taxes, often referred to as SALT, are also important. There is a limit on how much you can deduct for these taxes, which might influence your choice. If you donate to charity, those contributions can also be itemized, which can add up if you are a regular donor. To decide whether to itemize or take the standard deduction, start by calculating your total itemized deductions. If they exceed the standard deduction amount for your filing status, itemizing could save you more on taxes. If your itemized deductions are less than the standard deduction, it is usually simpler to take the standard deduction. Here are some practical tips for retirement tax planning. First, keep track of your expenses throughout the year. This will help you determine if itemizing is worth the extra effort. Second, if you are unsure, consulting a tax professional can provide guidance tailored to your situation. Lastly, consider bunching deductions into a single year if you have fluctuating expenses. This strategy can help you exceed the standard deduction threshold in certain years. By understanding these options and considering your unique financial situation in retirement, you can make an informed decision that helps minimize your tax liability.